presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all your information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate your growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
What is going on, folks? This is Jacob Shoup filling in for Tom O'Brien today. Let us take a look at what we are doing right now in the market. We have the E-mini, about 0.12% as it is right now at $5,212. Of course, you got a nice bump as well, especially from the low of April around that 4,964 area, trading up around the 5,200 right now. The Russell futures up about 0.44%. The NQs off about sideways currently at 18,202, and the Dow futures 39,000. See if we can crack 40 this year. We're sideways as well at 0.04%. The gold contract off slightly again, kind of in this consolidation period after a pretty significant run-up, trading at 2,323 in the current session right now. Silver at 27.52. We have copper at 4.59. Now crude oil. The U.S. is producing more crude oil than ever before, and more than any other country in history. Of course, we had a lot of reserves as well, which was determined sometime last month. And this kind of put oil prices down quite a bit. Now, I had anticipated that oil prices were going to continue to go up because of everything going on internationally. But I think this news came as a surprise to a lot of people, especially as there's a lot of news circulating that Biden's actually making it more difficult in order to drill. Well, we are producing more than ever. So right now we're currently trading at 78.48 on that crude contract. Tesla down 3.6% today. All right, so, this company's in a big restructuring period right now. They've fired even more people. And now you have a federal regulator that wants them to send more information regarding the autopilot system that was involved in the December recall. That had 2 million vehicles were recalled during that period, and then they were released back on the road, and crashes kept occurring. Again, there's now more recalls swirling around. We'll take a look at this a little bit. Federal regulator wants Tesla to send more information regarding the autopilot system. The government last month opened an investigation into the adequacy of the recall, which was deployed through a software update and involved nearly all vehicles Tesla had sold in the U.S. The regulator said it had discovered 20 crashes that occurred after the December recall. The National Highway Traffic Safety Administration asked Tesla to explain the process and rationale for many of its recall remedies. The agency's request included an accounting of miles driven per week using the driver assistance. Long story short on this is that if it does come out and they, haphazardly applied this update, just wanted to get it over with, or they weren't doing something they were supposed to do, this can send this stock even lower. Talk a little bit more. The auto industry's top regulator said that Tesla must send its reply by July 1st. Failing could result in civil penalties, good Lord, of as much as $27,168 for a violation per day and a maximum fine of $135 million. And again, as well, they have released new layoffs too. So in a restructuring period and getting some gnarly looks by federal regulators, let's take a look. Right now, the dollar at 105.38. Steel Dynamics kind of trading sideways, still in that 133 area. Some volatility on April 24th there. Now, Disney, obviously down 9.19% for the day. Oh, man, I read this morning. I'm a Disney investor, and I just every day ask myself why. And so let's take a look here. Disney pairs streaming losses, shares fall on loss, earnings outlook. Disney said it was close to making its streaming business profitable, but its shares fell about 10% Tuesday after the company reported a loss in projected earnings growth that narrowly missed Wall Street expectations. The media company's streaming unit lost $18 million in the March quarter, an improvement of $659 million loss in the year earlier quarter. Bob Iger said that the company is on track to achieve streaming profitability in the final quarter of the fiscal year that ends in September. The company's flagship Disney Plus streaming service added more than 6 million customers in the March quarter, meeting a rare subscriber forecast that it provided to investors in February. Disney raised its guidance for full-year adjusted earnings per share growth to about 25%. That's below 25.3% that had Wall Street was essentially anticipating. Let's see if there's anything else pertinent to this. Corporate expenses jumped $112 million for the quarter to $391 million. As costs related to the proxy battle that it's having, an annual meeting, as well as higher compensation and other cost inflation. Iger's compensation doubled. The number of domestic Disney Plus subscribers rose to 54 million in the March quarter from 46.1 million. Overall, global subscribers to Disney Plus, including its Hotstar service in India, which was a big thing they merged with earlier this year, increased to 153.6 million in the March quarter from 149.6. So increasing engagement, integrating new Hulu tile into Disney Plus, and then an ESPN tile, which I think are all good. And I really, if you ask me, I think I'm just against all these companies starting their own streaming platforms because I think it's an uphill battle for a lot of them. And it remains to be seen how profitable this is really going to be for Disney, especially considering how much it costs to kind of keep this running, right? So Disney's sports segment was hit during the quarter by increased programming and production costs related to the timing of college football playoffs, as well as lower affiliate revenue from cord cutting. Sports revenue rose 2% to $4.31 billion, while operating income in the business fell 2% to $778 million. And so that's what we have right now for Disney. The revenue increased 10% from a year earlier to 8.39%, while operating income rose 12%, 2.29. Now this is for their parks. Additionally, too, and this is something that I spoke about, and it's really like a quality and cultural thing that Iger is trying to reinstate back in Disney, but they're slowing the roll of the releases of Marvel. There's not really talk on what they're doing with Star Wars, but obviously these are major, money makers for this company. And, a few years ago, you'd get a new Marvel movie all the time. You'd get something on a streaming service. You'd get them in the movie theaters themselves. And one of the major criticisms they had was that they weren't good. And they did a lot of damage control, kind of blaming, the customer for that. But Bob Iger said, no, they weren't good. So we're going to focus on better quality and have a slower rollout. And I think that will be positive for Disney going forward. Folks, stay tuned. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. This, of course, is the May 7th Tom O'Brien Show. Take a little journey with me, guys. Okay? We're over here at TFNN.com. All right, we have everything on the front page here. Larry Live. Trading Fridays. The next one is this Friday, May 10th. You do not want to miss that. Of course, Tiger's Den Trading Room. But what I really want to show you is if we navigate over here to newsletters. What we see here on the second row is the opening call newsletter by Basil Chapman. Now, Basil releases a new publication of this every day, and he also has very good overviews on the weekend as well. So you really get a good bang for your buck on this. Additionally, some of these services, when you subscribe, you get access some of the old webinars that he has here. We're over here, we have this webinar now for Basil Chapman Live Trading December 15th webinar archive. Now, that one, you have to get access to. Regardless, the newsletter comes with a bunch of goodies, and it has very good insights from Basil Chapman. Now, Basil, are you with us?
I am, certainly. Hi, Jacob. How are you?
Doing well. How are you doing, Basil?
I'm well, thank you. I'm certainly actually very well now that we've got very summery weather. I love that.
Yeah, well, it's getting super hot here in Florida, but ideally I'm actually going to be up in Massachusetts sometime next month, so hopefully I can enjoy some of that weather. So going to Salem.
Good.
So we'll see what happens.
Salem, yeah, just nearby. Very good. It's a pretty place, Salem, yes.
Absolutely. So, Basil, what are we taking a look at right now today?
So I'll do a couple of things here. First of all, there's a technique that I developed a long time ago where I think of the market, especially when you're getting lows in the market that are accompanied by very negative news. Mm-hmm. And I tend to, did I just hit the, don't tell me, I was about to show you something and I hit the wrong button. Let me just see if I can get this real quickly. Windows, daily. I don't know if this is going to be it. Let me just try and see if that's it. No, it's not. Okay, what I was going to show you is a technique that I developed a long time ago that I call the, it's like you have an earthquake and then you have the aftershock. Sure. Sometimes the aftershock is much less than the earthquake. Sometimes it's even more. So I like to look at the markets. I can't show you that chart now. It's my yellow. I'll do it in my show tomorrow for my Tiger Technicians Hour at 10. I won't be able to find it right now. I hit the, I made it smaller, so now I can't find it. But what I wanted to show is that in a technique that I developed that I call the dark news cloud cover. I used to call it the dark news cloud cover, but now I just call it the dark news index. And what it says is that every once in a while, there is such heavy a preponderance of bad news, but the market doesn't really, it just ignores it. And then suddenly it grabs that information, same information yesterday, and all of a sudden today it becomes really important. So what I look at is when we make tops, you can sometimes get what I call an internal high, and then make a kind of a cup formation with a retest, and you make the residual high. And that's the exact same thing that you can do at lows. And in this particular instance, the low that was made on the 17th of April in the Dow, 37,753, that was retested. So you got an internal low, and then you got a residual low. It's like this H pattern that I always talk about. And at that particular point, the market started moving up very nicely. So I want you to, I haven't got that chart, it's a pity, but I'll do it in my show tomorrow. It's a yellow background. This is not the yellow background that I wanted to show. But within this context, what I wanted to point out was there is a technique that I've used it really for a very, very long time. We're looking at the 9-period moving average and the 14-period moving average. If the 9-period goes over the 14-period moving average, I change the color to green, and when it flips to negative, it goes pink. Well, on November the 3rd, that line went green in the Dow. This is the daily Dow. Look, it held. And just recently, around the 4th of April, it went pink. And it's been pink ever since until a few days ago. And now it's gone green again. So within that context, what I want you to show is this chart here of the Dow. And we've been along the Dow for a long time. And we're looking at this rally. I have a technique that I look at that's a cup formation. And then I choose a particular candle, a particular bar, and I draw in a green down. On the way up, I draw a dashed green line, and that is called the Chapman wave inside wedge target resistance line. And look, today it went yesterday it went right to the line. Today it went just above, and now it's slightly below the line. And here the target is. In the Chapman wave, we're always looking for a buy signal that's upgraded to a buy mode. I believe today that we've gone from a buy signal that I have to wait for 4 o'clock, but it's probably going to be upgraded to say we should go to at least 4 higher peaks. So that's the Dow. But now this is even more interesting, because if you look at the weekly chart, that 9-period moving average would cross positive back in November. It's not even close yet to turning down. So that's a really bullish sign. So this cup formation that we're looking at right here in the weekly chart is forming, but it hasn't gone very high. And I'm anticipating, this is just an anticipation. I like to sort of have a schematic at the back of my mind. It doesn't have to follow that, but at least I've got the parameters that I'm looking for. And I'm anticipating that this rally goes in the Dow to a D, and it gets there maybe by next week. And then I think we've got to be a little careful, because there could be a little bit of a weakness, and that's the weakness that's going to be very important. Does that green 9-period moving average in the weekly chart go negative? So far, everything's positive. The monthly is very positive. It's only at a peak C, and remember I said a buy signal upgraded to buy mode should go to at least a D, so this is still very positive for 2024. Now, what's really interesting is the IWM, the Russell 2000, and it's so fascinating to see. Look, the IWM is the Russell 2000. Look at this monthly chart. It's really, from the high of 244.46 back in November of 2021, slumping down to the 160s, and it's only here. It's got a long way to go to get to the all-time high. And yet the IWB, that's the Russell 1000, was at an all-time high just recently. Look, all-time high. And yet the IWC, which is the microcaps, is very much like the Russell 2000. It's actually even weaker. So what for subscribers, we actually went long a few days ago at about 200, just on 200. And we're anticipating that it's going to at least attempt to be a little bit of a leader, which it hasn't been for a long time. And you can even see today it's up 0.38%, and the Dow is only up 0.08, and the S&P is up 0.11, and the QQQ is up, I think it is 0.05. So this, for the very first time, it's kind of leading the pack. Now, that doesn't mean just say, oh, it's going to keep doing that. But look how nicely it turned around here with the green 9-period moving average in the weekly chart. Right here, it's a little, I think you can say, yes, you can. could have turned pink. In other words, it could have gone under the 40, which would be very negative, but it hasn't. It's still held very steady. So I'm looking at this and I'm thinking that there's a chance that if we can close, if not we, the IWM, the Russell iShares, this is the Russell 2000 small caps, if it's at 205.31 right now, if it's able to get to 207.80 or 208.30 this week, I'd like it to be this week, then there's a really good chance that over the coming week and a half, we can get closer to the 211.88 high of March, and that'll be really important.
Fantastic, Basil. We will see you tomorrow at 10 a.m. Eastern. That's right, huh?
Yep.
Thank you so much for coming on, Basil. Talk to you soon.
Thank you, Jacob. See you tomorrow.
Folks, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tigers Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Again, we were just on with Basil Chapman. Make sure you check our archive on YouTube. It's TFNN on YouTube. We have all of our archives of the shows on there. Make sure you like and subscribe. Again, that is a money-back guarantee if it's your first time subscribing to the service. Okay, and that is good for a month. Now, we're going to go over to one of our other favorite guests here. Now, if you take a look here on my screen, we're going to the ord-oracle.com. And this is written by Tim Ord, again, of the Ord Oracle. And Tim comes on the Tom O'Brien Show every Tuesday and Thursday, and we greatly appreciate his insights. And no doubt there are a bunch of things going on today, and we can't wait to hear what he has to say. Tim, how are you doing?
Good. Thanks for having me on again.
Absolutely. We can just crack right in, huh?
All right, let's do it. Let's take we'll start from the big picture and look backwards to the smaller picture. And so chart one is the summation index. This is McCollum summation index. They have a McCollum summation index, which measures a bigger trend. Then they have McCollum oscillator, which measures a little bit shorter term trend. Then actually I have I don't have, but the Zweig breast thrust indicator is even in a smaller trend. But, let's look at the summation index, which is the top window on chart one here. And back in, I think it was, here it is. We got for a bullish, this is intermediate term signals. This is like a year or longer a lot of times, sometimes a little bit shorter. But normally when these signals triggered, they mean usually out for at least 12 months, sometimes even a couple of years. But back in October 27th, for this to trigger, you need a reading below 700, minus 700, and that happened on October 27th. Then within 2 months, you need a rally back to plus 1,000, and that happened December 27th. So that opened the door for 2024, high probability this will be an up year. And so far, that's what's occurring. So anyhow, all those all those blue lines across the chart, this chart goes back to 2007, are the times when the summation index hit below minus 700, and the red lines are the times when it hit plus 1,000 in a 2-month period. And if you look at the bottom window there, they all came at lows. So what it did, you need a sign of weakness to get a bottom. You need panic. That's a sign of weakness. Then to get a buy signal, you need a sign of strength. And that if you don't get the sign of strength, you're going to have more selling climaxes until you finally do get a sign of strength. But we did have a sign of strength coming out of this low of last October, and that sign of strength came on December 27th. So that's a bullish intermediate term. So let's go to chart two.
We are pulling that up right now. We've got it.
All right, chart two, the top window is the McCollum oscillator, and this kind of measures the 3, 4, 5 months time frames. It can go longer, very seldom shorter. But same thing happens here. The red lines are the times when McCollum oscillator hits below minus 300, which we did on April 16th. To get the bullish signal, you need a rally to plus 300. Within a month, so it'd be May 16th. And right now, yesterday's close came in at 184, so we're about 100, less than 120 points away from 300 to get that signal. If we get that signal, that would probably, for the next, 3, 4, 5 months, that would project a rally, possibly even to year end. But yesterday we closed right around at 185, and we got till May 16th, which is another, about 10 trading days. It's about a week away. 16th comes on next Thursday. So we got rest this week and, 4 days next week. So we got, 7 trading days to go. Will that be hit? I think there's a real good chance it probably will. Not every day is going to be an up day, but we're kind of into a gap area right now. We'll look at that a little bit later, but it shows promise. But if we do get to plus 300, which I think we will, then you should stay long. There's no reason to be short, even though you may have a week or so down. That April decline that we had did produce a selling climax on April 16th. So the washout low is in. So now we got to see how strong this rally will go. It's not an ideal. So if you're thinking about shorts, this is probably not a good time. I'll put it that way. So in general, I think we're probably going to move higher. So let's look at even the shorter-term time frame. So the long-term time frame's in because the summation index is bullish signal back in December of 2023. The McClellan oscillator, which is a little bit shorter time frame, is a multi-month type signal. It hasn't hit it yet, but it's still got 7 trading days to go to hit it, which is a good chance we can do it. And now we can go to Zweig breadth thrust indicator. Now this indicator is probably a couple of month indicator, sometimes a little less, but it kind of picks out the short-term lows. And on I think it was April 16th, we hit below minus 0.4 on this. To describe this Zweig breadth thrust indicator, it's advanced. It's a NYSE advanced divided by NYSE total, and you take a 10-day average of that. So you need a reading to get the selling climax. You need a reading below 0.4, which happened on April 16th, and you need a rally to within 10 days or less to hit 0.6. Well, we did hit 0.6 yesterday, but it's 12 days. So did that meet the parameters? Not quite, but it's not bearish. It's just not quite as bullish. Instead, it had taken 10 days. It took us 12 days to get there. Still, worth. It's not. It doesn't mean like the surge. Last time we got this signal came in October, right at the bottom, and you can see on that chart in the middle there that marked the bottom, and the market just pretty much skyrocketed all the way up until first part of April. So even though we're getting a sign of strength here, not as strong as we'd like to see if it was 10 days, but still decent. So the rally will probably continue here. That's the reason why I'm thinking that the McClellan oscillator may get to plus 300 by next Thursday, because this is not. There's nothing weakness in here. It's just not as strong as the last signal.
Right.
So anyhow, it looks bullish. So let's get. Okay, here's the music.
Yeah.
So,
Tim, stay right there. We'll be right back. Folks, we'll be right back with Tim Ord of the Ord Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We are currently with Tim Ord of the Ord Oracle. That is ord-oracle.com. Tim, before we went to break, we were talking about the swag breadth indicator on the SPX.
Right. One thing I want to really say about it, to get that, for that indicator to trigger, I guess you might say, you need a reading below 0.4. Then within 10 days, you need a reading of 10 trading days, you need a reading of 0.6. And this last go around, it took 12 days. It did reach parameters, but it took too long. So it's still a bullish signal, but not as bullish as you like to see anything. You know, the last time we got that signal, it took 5 days back in the October low. I don't know if you can see it on that chart there. That signal was triggered in 5 days, and the market just kind of rocketed up. This time around, it took 12 days. So the rally's still intact, but probably is not going to be as strong as it was coming off the October low. So that's still bullish, still up, but, you know.
It's a bit more tamed. Yeah.
All right, 4. I got a pink area, the top chart's the SPY, and I got a pink area in there, and I got a bunch of numbers right that says where the trend is and where the trend closed, and all those readings are above 1.2. What that trend reading suggests in that area, normally when you start seeing panic in a certain area, it continues to see panic, and that's the reason why you know this market's forming a bottom. If those trend readings didn't get above 1.2 on that decline, the market still be going down. But we did get trend readings between actually 500 to basically 512 on the SPY. So that's the whole area, support area. So we went down, you had panic. We're trying to get a sign of strength going to the upside. And the McCall and Oscar is on track to do that. We're not to plus 300 yet, but we haven't reached the time ending, which is next Thursday. So I think there's a good chance we can get there by next Thursday. But right now, I got a blue area on that chart. We're running into that blue area. That blue area is a gap. And normally when you test a gap on lighter volume, which is actually what we're doing right now, it's usually a resistance zone. But what's curious here, if you look at the bottom window, normally you go into a resistance area, the volume drops off, and the VIX goes up. Here the volume's dropping off, but the VIX is actually still going down. So this gap may not be a resistance, is my point. I thought we'd stop in here, consolidate a little bit before we head higher. But since the VIX is actually making a new lower low today, it's kind of hard to see on this chart. But it is touching a lower low as the S&P is making a higher high, even though it's on lighter volume, you know. So you get, it's not real bearish. And if we do even have a bearish situation, it's probably a minor pullback because we already made the low. We already seen the panic. The panic's done. And so all we need is kind of, sometimes I guess there's lacking of buying pressure. I think, so the uptrend's intact. What suggests is maybe it's not as strong as, I like to have it, but you can't get everything you wish in the stock market. But it's not real bearish here. So I'm thinking, if we're going to see a pullback, it's probably going to be minor because the VIX is not showing bearish signs in here, even though the volume is. So it's if at best, at worst, I think it's probably just a mild consolidation. So bigger trends up, I'd just stay long. I don't see any top of any consequence forming here. So I think May will be up along with June. I think July could probably have some trouble, but we'll look at it then. So anyhow, remain bullish. There's no top of any consequence here from what I can see. So let's take a chart. Flip to chart 5.
Yep. So we're looking at the GDX here, or at least something with gold.
This is This is a monthly chart. It goes way back, and I kind of looked some studies here. This could develop into something really, which I'm thinking is something big in the gold market is happening right now. And this chart doesn't. Anyhow, the top chart is a bullish percent index for the gold miners index / GDX. It's the ratio. So only times I do ratios, because sometimes these ratios show things on the chart that GDX doesn't show, or that bullish percent index for the gold miners doesn't show. But once you put that ratio in there, things kind of pop out. And this ratio is a monthly ratio going back to 2006 or something, or 2007. But what I notice, when the ratio is above 0.25 and stays above 0.25, you get these big rallies that start in 2016, which is kind of middle of the chart. That's where that light blue going horizontal. And 2019, that ratio got above 0.25 and stayed above 2.5. Right now we're 0.231. We're above 2.25. My point is, if we stay above 2.25, this will predict that you'll have these strong rallies that happened like 2016. You got a lot of stocks. 2016 went from 10 times. You went from a dime to $1, $1 to $10, and same thing happened in 2019. You had a lot of 10-timers that gold stocks went through. And I'm thinking this chart is setting up to do something similar to that, because it's very seldom you get above 0.25. We've been above 2.5 for the last 3 months now, and we appear to be holding above 0.25. So let's look at the shorter term, which is next chart.
Yep, give me 1 second to get that up for you. Perfect.
All right, the bottom window is this chart just measures the internal strength of the components of GDX. So when this chart, bottom window is the 50-day average of the up-down volume advanced client indicators. When this chart's above 0, you got an uptrend going. And normally the uptrend ends when you break below 0. But, I got back in 2019. If you look back there, you can see it stayed above 0 in general for 16 months, and that happened again actually in 2022. You stayed above 0 for about 6 months. We've been above 0 for last at least a month now. Will it stay above? Right now this thing's not weakening. It's not pulling back at all, and even though the market's gone sideways, if you look on the top windows, GDX gone sideways here for a month. This indicator is not weakening at all. It's staying relatively high, up around plus 10, plus 15 area. And so they're buying the up-down volume, suggesting there's more volume going compared to the down volume. So to me, that's buying pressure going into this stock. And I think this is a neckline of a head and shoulders bottom on GDX. We're at the neckline right now. So I'm thinking we're eating through the supply, because the up-down volume 50-day average is staying strong. So we're probably going to actually see a sign of strength here pretty quick. So if we do, that kind of puts in favor of the previous chart we were looking at. So there's some, and I hear the music again.
Yeah, and Tim, we have a short segment on for the next, but I know you got something with silver going on as well. I would love to hear your input on that, and I know our viewers would as well. So.
All right.
All right, folks, stay tuned. We'll be right back with Tim Ord of the Ord Oracle to wrap up the show.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We were with Tim Ord of the Ord Oracle. Tim, I know we have a short segment here, but I know you got some charts on silver as well. And I'm kind of curious to hear your input on that.
Actually, one of your listeners emailed me and says, do you have any stocks that are starting to pop out? And I can get into all the technical stuff, but the easiest way to look at stocks, momentum rules all indicators. If it's up in an uptrend, it doesn't matter what, the stocks are overbought or whatever. But I just put two, this is a monthly chart. This is chart 7. It's a monthly chart of Discovery Silver Corp. Anyhow, in a nutshell, I put a monthly Bollinger Band on this, and when it's above the mid-Bollinger Band, it's on a buy signal. When it's below the mid-Bollinger Band, it's on a sell signal. And when it gets above 100% above the upper Bollinger Band, it's a sell signal. So that's the reason I point that out. So right now, we're just entering into the mid-Bollinger Band on this. We might be up at or right at it or whatever. But if you notice, the volume did jump up on this, so this is probably going to flip to a buy signal if it hasn't already. So this is a silver stock, and now I got one more right after it, and this is Rio 2, whatever. Same thing happens if you're above the mid Bollinger Band, it's a buy signal. If you get 100% above the upper Bollinger Band, it's a sell signal. And anyhow, you flip to a buy signal here. It looks like about December of 2023, and the volume jumped up. So this is on a monthly buy signal. As long as it stays above the mid-Bollinger Band, it's on a buy signal. So these two silver stocks are look promising. So, but if they close below the mid Bollinger Band, you have to sell it. So it's kind of a fail-safe, high probability trades because you're looking at a monthly chart. It's meant to catch the trend, and so I think these two silver stocks could perform very well going forward.
Well, Tim, thank you so much for joining us again. Again, you're on every Tuesday and Thursday. They can find you at ord-oracle.com. Tim, we always appreciate you coming on. I hope you have a great rest of your day.
Great, thank you.
Absolutely. And folks, thank you so much for joining me today. We'll be back tomorrow for usual programming. Hope you have a great rest of your day.